business. He's sticking by with the deadline, kind of extending it to August 7th, leaving room for negotiation on the table with certain countries. But on the other hand, pretty stern about levying those 40% duties on all transshipped goods, a hike in tariffs for Canada.
Right. Thank you for having me, first of all. But certainly, yes, he looks like he's delivering on the promises or the threats, rather, that he had delivered, earlier in the year. But of course, I think, while we have these kinds of clarity on what kind of tariff rates a lot of different countries are facing, I think the whole clarity around a trade framework is still very much missing. I think, you would have discussed, I'm sure, the tariffs in India pretty much yesterday. But having seen that, having seen a number of other volatile rates, different rates of tariffs across countries without any basis, it does seem like, he's still trying to use tariffs as a negotiating tool. And that does mean that we could, see them being used, being hiked, being lowered as and when he achieves the different things that he aims to achieve. So that kind of leaves the markets very, very uncertain about the tariffs and the whole trade policy, the protectionism that we are seeing right now. Because, at the end of the day, as we know it, this is not just about trade. It goes beyond that.
Hi, Charu. Morning. This is Shrishti also joining in. But Charu, the other big commentary coming in from President Trump today is actually on the pharma space, where he's giving a deadline of 60 days for the companies to adjust their pricing accordingly and rather match the US prices with respect to what they charge in the other nations. What do you believe that how these companies will react to that? Because the letters have been sent. Do you believe that this could actually change the dynamics of the US companies specifically, which can impact on the other nations as well?
I mean, pharma companies, to be fair, have seen policy risks in a massive way since the start of this administration, whether it is related to the appointments that Trump has made in that sector or because of the threats around prices for these drugs as well. I do think that these policy risks will continue for the pharma sector in particular, for the drug makers to be very, very specific in that sector. But I think judging from the letters that came out yesterday, I do think that the tone has softened a little bit here. So again, I don't think the risks for that sector are going away, but those certainly remain manageable. And for the healthcare sector in general, I mean, it remains a defensive sector. If we see these macro risks on a broader level, I think the defensive sectors will continue to play as a good hedge in portfolios, but certainly need to be very selective in this area.
Right, very selective over there. But Charu, let's talk about US and some of its major allies. Let's talk about the kind of commentary they've given on Canada. They've hiked the rates, the tariff rates over there. You have Korea, that's South Korea, that's in trouble right now. Mexico, similar commentary we are hearing. What do you make of this on account of the trade relations that they have with their major allies, and how could that impact the US economy?
I think certainly, if you're talking to, an economist, this is a very difficult situation to start pricing into your models, because like I said, right, we have the clarity on rates, but I don't have the clarity on whether these rates will stay tomorrow and day after and the week after, right? So it certainly remains very difficult for any economy, for economists, for countries to really start adapting to, these kind of tariff rates. Having said that, I think the broader outlook towards more and more protectionism is here to stay. So we are going to see impact on supply chains being, trying to be made more resilient in this scenario. Economic growth numbers will potentially be downgraded for a lot of these economies that face higher tariff rates. I think on a very broader scale, I would say this is overall negative for growth in rest of the world. It is obviously inflationary for the US. So overall, I do think that a lot of the macro situations will change and the policy response will have to be altered in effect to address those kind of headwinds.
Since you did touch upon, Charu, what happens to US versus rest of the world, how do you think flows will actually move given these two pools?
So the US situation is extremely interesting at this point because, you'll have to take two different lenses here to understand what's happening in the US. On a micro level, US is doing extremely extremely well. You look at the earnings season, the tech earnings, the AI momentum that has come back with a bang, right? So the overall corporate enthusiasm is running at a high again, whereas of course the sovereign risks and macro risks are also very, very high at this point. So from that perspective, I mean, I would expect, like I said, the rest of the world growth to take a step lower because of tariff risk, be it Europe, which is obviously facing heavy tariffs. Switzerland is facing high tariffs, and that's a very export-focused economy. So when you see these kinds of effects on rest of the world growth, particularly, I do think capital flows back into the US at this point. But do we get that kind of a biased capital allocation in the US tech sector, particularly as we've had over the last several years? I think that remains a question, because I do think the weaker US dollar is here to stay, and that kind of erodes how attractive US equities or US assets are for a foreign investor. So you certainly need to hedge that FX risk. You certainly need to hedge that sovereign risk, where you need probably a policy neutral asset like a gold in your portfolio and an exposure to markets outside the US as well to continue to hedge for those macro risks in the US.
Right. Okay, lots of moving parts. But Charu, thanks for your insight. Good to speak with you.
Thank you for having me.
Thanks. Okay, let's talk about where does India lie in this piece of puzzle. And while we're still working with that